Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 30th, 2025, and we're diving into Universal's latest earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Universal has just released their fiscal year and fourth quarter 2025 results, and there's a lot to unpack, from revenue growth to strategic initiatives in their tobacco and ingredients segments.
Revenue and profitability overview. Let's start with the top line. Universal reported a revenue of $2.9 billion for fiscal year 2025, which is a 7% increase year over year. John, what drove this growth?
The growth was primarily driven by higher tobacco sales prices and improved performance in both the tobacco operations and ingredients operations segments. Despite a slight decline in tobacco sales volumes, the company managed to increase its operating income by 5% to $232 million.
However, net income saw a decline. Can you explain why?
Yes, net income dropped by 21% to $95 million, largely due to restructuring and impairment costs, as well as a pension settlement charge. These non-recurring expenses impacted the bottom line significantly.
Tobacco operations performance. Moving on to the tobacco operations segment, Universal reported a 7% increase in revenue to $2.6 billion. What factors contributed to this performance?
The segment benefited from historically high green tobacco prices and strong customer demand. Additionally, successful tobacco procurement and marketing efforts, along with higher quality burley crops in Africa, played a crucial role in boosting both revenue and operating income, which rose by 8%.
Were there any challenges faced by this segment?
Yes, there were weather-reduced crop sizes in Brazil and the United States, which affected sales volumes. However, the company managed to offset these challenges with higher sales prices and better crop quality in other regions.
Ingredients, operations, and strategic initiatives. Let's talk about the ingredients operations segment. It seems to have had a remarkable year. Can you elaborate on its performance?
Absolutely. The ingredients operations segment saw a 9% increase in revenue to $338.6 million, with operating income surging by 212% to $12.3 million. This was driven by higher sales volumes and increased capabilities from the expansion of their Lancaster facility.
What strategic initiatives have they undertaken in this segment?
Universal has been focusing on expanding its product offerings and enhancing its sales, marketing, and product development teams. The completion of the Lancaster facility expansion has also supported the growth in sales of value-added products, which are seeing high interest from customers.
Financial position and outlook. John, how is Universal positioned financially as they move into fiscal year 2026?
Universal is in a strong financial position with a cash balance of $260 million and a reduction in net debt by $179.6 million. They have approximately $270 million available under their revolving credit facility, which provides them with ample liquidity to support future growth initiatives.
What is the outlook for the coming year?
The company anticipates continued strong demand for tobacco and expects larger tobacco crops to balance global supply. They are also optimistic about the growth prospects in their ingredients business, supported by their expanded capabilities and customer interest in new products.
Key takeaways. In summary, Universal has delivered a solid performance in fiscal year 2025 with significant growth in revenue and operating income despite some challenges. Their strategic initiatives in both the tobacco and ingredients segments are setting a strong foundation for future growth. John, any final thoughts?
Universal's focus on operational efficiencies and strategic expansions, particularly in the ingredients segment, positions them well for the future. Investors should keep an eye on their ability to manage costs and leverage their expanded capabilities to drive further growth.
Thank you, John, for your insights. And And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Universal's performance in the comments below.